Did you know that building wealth in real estate can far exceed what you can make in the stock market? I'm Lauren, and this is Raul with the Schrader Group, and today we are going to be talking about making your investment portfolio with long-term rental properties. So let's get into it. What makes a good investment home?
Yeah, so I mean, you want to see, there's two different avenues, right? There's the rental side and then the Airbnb, VRBOs. And really what makes a good investment is what you're trying to, your expectations, right? What are you trying to, accomplish? A lot of times people say, well, I'd rather pull my money out of the stock market, it's so volatile, and get into something that's a little bit more reliable. And what I mean by that is, like, say, for example, we normally run a 4 to 6% roll value year over year, and accumulation, I guess you can say, where property values are rising. That's a safe bet, right? Because we know that historically over the last 15, 20 years, this continuously went up. Now, what we saw last year and a year and a half ago was property taxes, or not taxes, but the values jumped up pretty substantially. I mean, we saw some jumps for anywhere from 10 all the way to 20% year over year.
Crazy.
So if you had properties back then, you'd made a great return.
Yes.
But it also just depends on what your overall exit strategy would be as well.
Okay, so how much money would an investor need to get started?
So it depends. I mean, there's a lot of portfolios out there and a lot of lenders that we work with. Typically, the rule of thumb is if you have a property already, like your homestead, your second property would be what we call an investment home or a second home. You're looking at about 20% down on that. Now, if you're trying to be like a fix and flip kind of, investment, then you could get in there a little bit less, but the margins will change a little bit because now your interest might be a little bit higher based off of a traditional loan.
So if someone were to ask you, should I invest in long-term rental properties or Airbnb? How would you answer that?
It depends where we're located, right?
Okay.
Because if we're going to be somewhere
Location.
Exactly, right? So if we're going to be downtown, then I would say, well, Airbnb it, because then you get more frequency, right? More traffic. Right. So if we can, let's just say we have a $2,000 rental right here, but I can rent this Airbnb in the same area and have $200 a night. Well, 10 days pays $2,000 already. So anything over 10 days of rental is now more profitable than just renting it out to a family or somebody that's going to be there. Is it safer? Yes. Is it more consistent? Absolutely. Will they take better care of your house? Probably, because you don't have 100 people going through there. But if you can make an extra $2,000 or $3,000 a year, or a month, I should say, and then multiply that by 12, that's $30,000 to $36,000 a year. That's extra income based off of whatever we just discussed.
Okay, so if I'm looking for a long-term rental property, what are some certain things to be looking for specifically? Location or?
Sure. So location is always key. In San Antonio, we've been very blessed to have great school districts. So that's going to be something else that's very, very important.
Military,
if we can. So I had a guy that I represented. All he does is buy around the military bases, and he just rents them out to military.
I think that's genius.
It is, because they're always full, right? And then he got into the investment side of saying, we'll do Airbnbs. Well, we have bases that, turn recruits every month.
Right.
They have the graduation. So rather than coming into San Antonio and getting a week hotel, they're getting a week rental, and they're paying almost the same price, but he's making all that money month over month over month over month. And it's just really depends on what you're trying to do. How involved do you want to be? Do you want something that's safe, get a good family in there, and then just kind of set it and forget it? Well, hey, maybe we get something a little bit more conservative. But, any kind of features that add to it, one-stories are great for rentals because they're not super big. They don't normally charge a lot more, for the actual acquisition, depending on what side of town you are on. But then sometimes you get a big house and you could add more people, and sometimes that gets a little tricky because then you have more people that should be there. And then you got to kind of do more of that landlord follow-up.
And so when looking for an investment property, are you looking for certain price reductions in order to make it worth your while, or?
So I think if we're looking at a rental situation for where we're at right now, the average home is anywhere between $2,100 to $2,500 right now in San Antonio, depending on what side of town you're on. I would say you never want to be the outlier, which is like $35,000 or $4,000, because it's going to take a unique demographic or a unique person to get that house. I'd rather be in that mid to family to where they're going to need it. They're going to be okay with it. The payments make sense, because you got to really think about it this way. Most rentals require you to have 3 times your income, right? So if I'm at $2,500 a month, well, you got to have $7,500 coming in. If not, you're not going to be able to qualify.
Right.
So you got to take that into perspective, because if they don't have that, then now you're stretching that budget, or maybe that house might stay on the market a little bit longer. And when it's staying on the market, not only are you paying taxes and insurance, but you're also paying that mortgage that you
Right.
just picked up.
Do you think it's hard to find investment properties?
No, when we were back in 21, going into 22, like they're getting gobbled up by all these outside investors. Right now, we're starting to see them come back. There's a lot of great deals out there, especially in the new home world right now, because there's a lot of inventory. So you're able to get something that's really good, brand new. 10, you have a 10-year structural warranty still. You have a 1 year on the front door, back door on workmanship, 2 year on all the major mechanicals. But I always say have a insurance in play because something will happen, and you're the only person that has to go fix it, right? They're going to call you, hey, my water heater went out. Fix it, right? They don't want to know how or when, they want it now.
Right.
So it's always good to have a policy in place or someone that's really good that could answer that phone and be there within a quick turn period.
Like property management type?
Property management, yep.
Awesome. How can a realtor help come in and
Well, number one, we were talking about rental rates, right? So we want to make sure that if we're going to buy something, let's just say we put the 20% down and our monthly number is going to be $1,600, and I'm just making things up. We're going to want to make sure that we have at least enough meat on the bone to cover not only the mortgage, we want to make sure we bake in a little bit for repairs, and we want to make sure we make a little bit of profit, right? Because if not, it's not making sense. Now, on the back end accounting side, we could depreciate and we'll write it off, and it'll be great for our income statements. But in the short run, we want to make sure that we're there. So then once we know that our $1,600 payment's there, we want to probably be in the $2,000 to $2,100 rent rate, right? Based on what it is. Then we do a comparable market analysis, go back and see what the rentals are doing.
Yes.
And if for some reason we're in this zone where they're getting $2,100, $2,200, then we're right. That's a good neighborhood to be in or a good area. Now, if we see some that are making $2,600, $2,700, even better, we're doing really well. But we always want to make sure that if we're going to forecast that we're going to get these rental rates, then we have something to back it up, because there's nothing worse than somebody going out there thinking they're going to make $2,000 on a monthly rent, and then they end up at $1,600 because nobody's coming to the table, and now they're just breaking even.
Right.
And typically, if you're breaking even, everything else starts to feel like it's a drag. The water heater goes out, the AC goes out, and then you start saying, "Why did I do this?"
Right.
And we don't want you to be in that position, because real estate is where you can accumulate a lot of wealth.
Yeah.
Slow growth, but steady growth, and we're
Make money while you sleep, right?
Exactly, and we're in San Antonio. We're very blessed. We have a good, dynamic economy here that allows us. We have natural inward migration. That PCS season. We got a lot of things that happen that most areas don't. So rentals are definitely there. I mean, when you have an apartment complex, 2-bedroom apartments are $1,800. Most people would say, "I'd rather have a yard. I'd rather have an extra bedroom. I'd rather have privacy."
Yeah.
And that's kind of where that comes in. I think that long-term strategy is if you can buy it without it disturbing your life, it's worth it.
Absolutely. Yeah, you got to get that realtor in there for do the homework and due diligence and help guide you. That's really good information. Yeah. In closing, I hope that we have provided you with some helpful information to start investing in real estate. I'm Lauren. This is Raul once again, and please reach out if you have any questions. You have the expert right here, or subscribe to our channel, and we would love to help you.
It's been a pleasure. Y'all have a blessed day, and we'll talk to y'all soon.